Across the world, people have their housing costs taken away as much as half of their income. Have you ever thought of trying to change that? The good news is there is a way. House hacking is real, and we are here to show you how other people just like you have made it happen. Welcome to the House Hacking Podcast. And here is your host, house hacking expert, Andrew Kerr.
Thank you, everyone, for listening, and we really appreciate all the great reviews all of you have been leaving. One of the ways you can actually help support the show is hit that subscribe button. So whether you're watching on YouTube, you're listening on an Apple Podcast, Stitcher, Spotify, hit that subscribe button right at the top. That way you'll get an update as soon as a new episode is released. Also, feel free to follow us on social media at the House Hacking Podcast. If you have questions on the show, or if you have the need of some advice on a house hack that you're thinking about doing, shoot us a direct message on social media and we'll get you some feedback and help you along the way. Now, today's guest is Logan Alec. He spent nearly a decade at an international financial service firm. He's a licensed CPA. And he's also the founder of a financial blog called Money Done Right. And he's a house hacker. Awesome, Logan. Thanks so much for being on the show. I'm really excited about your story, hearing about this house hack that you did for a fourplex. But again, thanks for being on. Where are you calling in from?
I'm in Santa Clarita, California. We're a suburb of Los Angeles.
Oh, cool. Well, again, I appreciate you taking the time. And I think a good place to start is, can you just give us this high-level summary of your house hacking experience, sort of when it was, the type of house hack that you did, just a nice overview for everyone that's listening.
Sure. So for a few years after I graduated college, I got keenly interested in real estate investing. I attribute a lot of that to my occupation at the time. I was a tax accountant for an accounting firm, and a lot of my clients were real estate investors. And, when I saw how much money they were making and, how little tax they were paying, I was like, you know what, I want to explore this for myself as well. And somewhere along the way, I read on a blog, some financial blog. I wish I could get them a shout out now, but I don't remember which blog it was, that, it laid out how you can buy a small multi-unit property, up to 4 units, using very low down payment financing, an FHA loan. And this got me really interested. So I spent some time researching. When I first heard about this strategy, the year was about 2010, 2011-ish. And it was a pretty tough real estate market at that time, or lending market, I should say. Lenders they weren't just exactly giving out mortgages like they were a few years prior, right? So, it was tough for me as basically a kid a couple years out of college to qualify for such a large loan with such a high, loan to value at that time. Fast forward a few years, 2015, I had a few more years of working experience from my belt. My income was higher. I had more assets, and I was able to qualify for an FHA loan on a 4-unit property here in the Los Angeles area. I lived in 1 unit, rented out the other 3. I also rented out the bedroom in my unit to a fellow I found on Craigslist who was moving from Minnesota to California to be closer to his girlfriend, then fiance, now wife. And so I just kind of jumped in head first. I was not married at the time. I did not have a family, which made it easier for sure. But even so, there were some sacrifices that had to be made. For example, my commute went from a very nice, short 15-minute subway ride to an hour and a half one-way ordeal involving a car, a light rail, subway, walking. So, but in the end, it was definitely worth it.
Awesome. I mean, that's a really cool and I think great summary. Thank you for that. As you were talking, I feel like I wrote down half a dozen different questions. So let's really just sort of dig into this. I mean, you were a tax accountant. This is sort of your first real job. And here you are working on finances and taxes for these clients. And you realize like, hey, these guys are worth a lot of money. They're not paying a lot of taxes on the money that they're making. And they just all happen to be real estate investors?
Well, some of them, I would say it was about 50-50. Probably half were full-time real estate investors. So people who their main business or occupation was investing in rental real estate. The other half were successful entrepreneurs They may have had a successful service business or manufacturing business or something like that, but they would just invest a lot of their profits into rental properties. Yeah, when you just looked at everything considered with the depreciation and all that, especially if they were able to qualify for real estate professional status, some of them who are more passive in their entrepreneurial endeavors at that point, who had taken a back seat and were now just collecting a K-1. Those folks, right, if they were able to qualify as real estate professionals, they were able to offset some of that other K-1 income with their rental or with their tax losses on their real estate, which was pretty cool. They were still cash flowing like crazy on a lot of these properties, but they're recognizing a tax loss, which they could use to offset other income if they were able to qualify as a real estate professional. Not all the entrepreneurs could do that because it is, it is tough, if not impossible, to have like a full-time job and also qualify as real estate professional. But for those who had taken more of a backseat approach from their businesses and now are more or less just collecting a K-1 and distribution checks, that was a possibility for them.
Awesome. So, was this something that like clicked for you right away, or is this, how long did it sort of take for you to like working in this business doing accounting where you were like, oh my goodness, this is this common theme of everyone that has a lot of money has been involved in real estate? So, it was my first job out of college, and, for the first 6 months or so, I just felt, like everybody at their first job, just overwhelmed and like, oh my gosh, what am I doing? And so I really wasn't able to pick up patterns like that probably until, about a year in. And then I figured, wow, a lot of these folks, they have this, this Schedule E attached to their tax return, and they have all these properties listed on it, or they're getting all these K-1s from these partnerships or LLCs or LPs with funny names like Main Street Investment Partners LP, and it's like, what is that? And so it eventually I just began noticing these patterns that these very successful people, they would invest in real estate. And then I remember, later on, not at this time because the market was down, but a few years later when the market started picking back up, I started having to file a lot of these forms that go with that you have to file when you do a 1031 exchange. And so that even broadened my kind of mindset even more. It's like, oh, wow, you can even defer the taxes when you sell the property too, and just keep on leveling up and leveling up and leveling up. So that was that influenced me as well. So my goal was, okay, I'll start with the small 4-unit. And, depending on market conditions, maybe eventually 1031 will level up to an 8, 16, 32, maybe one day something larger than that. But because, it was never really my goal to become like a full-time real estate investor or syndicator or anything like that. I just, saw it as something that I wanted to get into on the side while I pursued other things as my main, my main profit center. So when you came across that blog post, was that just as a means to, hey, here's a cheap way to get into real estate investing? Or do you remember, did it specifically talk about this idea of house hacking where you can buy it, live in it, have cheap rent? Or is it the sort of combination of the two?
I don't remember the phrase house hacking being used in that piece. I think I first heard the phrase house hacking on Bigger Pockets, but this particular blog post, I don't remember them describing as house hacking. I think it was just a list of ways that young people could get started investing in real estate, and that was one of the ways they listed.
All right, so you learned about real estate through all these clients. You realized about the tax benefits, how you can roll the properties over through 1031s. You said, I'm going to do this. I'm going to do the FHA loan. How long was it actually before you sort of committed to doing this, before you actually found a property?
So there were 2 episodes in my life when I was really, I'll say, into this. And the first was kind of that earlier times in about 2011-ish. And I was really into it, and I felt committed to it, but I wasn't able to qualify for a loan just based on the lending environment at the time, my income levels, my work history, and things like that. So that was like 2011, 2012. Then I kind of put that idea on the back shelf for a while, just, focused very hard on my career as an accountant and things like that. And fast forward a few years to 2014. The end of 2014. That's when I got very serious about it again. Let's say October, November 2014. I had spreadsheets laid out to kind of analyze properties. I would look around at properties, and I worked very hard to find the right real estate agent to work with. But basically, from that time when I really got committed to the idea again in late 2014, it took me until the following September 2015 to actually close on the deal.
Okay, so not 9, 10 months before you sort of recommitted and started looking. I mean, you mentioned in there that it took a while to find the right real estate agent. What was some of the difficulties there, and why did you end up going with the real estate agent that you did go with?
Right. So I went through a couple real estate agents that I didn't like, and I found them because they were kind of celebrated real estate agents in my area. They were one of them. The first one was referred to me by somebody. The second one I had found just on the internet, I think in like Bigger Pockets and places like that, as someone who had like a lot of experience. But I found that these kind of big name real estate agents, well, for one thing, they would rather represent sellers than buyers, because especially a first time buyer, right? Because just working with a buyer, especially a first time buyer, is just more time intensive. Especially a first-time buyer looking to qualify, looking to buy with an FHA loan rather than a conventional loan, or even better, cash, right? So, I found that these large, and someone who's looking for kind of a needle in a haystack, right? A 4-unit property in the Los Angeles area that's not being bought by cash buyers for hundreds of thousands of dollars above asking, right? So, hot real estate market, that's just the reality. So I found that these real estate agents that I had come across, one had been recommended to me, and the other I had found on the internet, they just weren't very responsive and didn't make a lot of time for me and my questions and my inquiries. And I get it. They probably had easier transactions that they had to make money off of, right? So I decided, well, look, if these more experienced kind of hotshot agents aren't really doing it for me, I probably got to find one who's like young and hungry, like I am, right?
Yeah.
And that's basically what I did. I found her on Bigger Pockets. I think I just created a post that was like, hey, I'm a new real estate investor. I want to buy a 4-unit property here in the Southern California area. Are there any, I think I actually used the phrase young and hungry, real estate agents who would be willing to help me out with this as my agent. And I found one, and we met, and she was very responsive. She didn't have a lot of experience necessarily, but because she didn't really have a whole lot of clients, she was able to be very responsive and helpful to me along the way.
Yeah, that's awesome.
So that's how I found her.
Yeah, I think that's a great tip that you just mentioned. If you do try to go with those realtors that are really well known in the community, they're used to that higher market price point. They do a lot of listings. Go after that younger, newer realtor that's hungry for the business, and you'll get more of their time than you would if you went with that all-star agent.
I will say that if you're working with someone newer and younger, maybe not as much experience, like this was her first multi-unit deal that she had done.
So super new, right?
So definitely her first FHA on a multi-unit, right? So the more experienced the professional you're working with is, and this doesn't just go with real estate agents, it could go kind of across the board. But I would say that real estate agent is probably one of the few professions where working with maybe a newbie can be just as well as working with someone more experienced. I wouldn't necessarily say the same about an attorney or something like that, but with real estate agents, I think that's one of the professions where you can get away with working with someone a little bit less experienced. But that said, you have to educate yourself too, because take responsibility for your own education and not lean too heavily on the agent in this case, precisely because they might be new and inexperienced in this kind of purchase you're trying to make.
All right, so you found this young, hungry agent. You gave her the criteria. I mean, and you said you ended up buying this place. It was like an hour and a half away from your job. So it seems like you had a pretty wide geographic area that you were searching for. Did you start off that wide, or did you sort of start smaller and then have to expand it to find the right property?
I didn't start off that wide. And it took me quite a number of months to get it through my skull that I'm not going to find the property I'm looking for in the area I was looking for. So I started my search in, nice areas of LA, right? And I quickly found out that you're not going to be able to find, at least in that market at that time, you were not going to be able to buy a small multi-unit in one of these hot parts of LA with an FHA loan.
Yeah.
You basically need cash, usually over $1 million in cash, to buy well over the asking prices for these properties. That I did not have. Both my agent and I, and kind of bless her heart too, just for putting in all these offers for me. There's a time when, we were just putting offers on these properties. It's like, no, just getting no bites. So finally I said, look, okay, I'm not going to be able to buy something in, the hot parts of LA. I'm going to have to broaden my geographic outlook somewhat. So, and I did. And the property I eventually landed on, it was not in the city of Los Angeles proper. It was in an unincorporated part of LA, which was nice because there's no rent control, at least at the time. Yeah, so I did have to expand my reach. And I think that's probably, I would say, for people who want to do the strategy and who live in large, cities with hot real estate markets, that's you're probably going to have to do that if you want to put 3.5% down on a 4-unit. Or maybe this could be regional. In LA, there's not a whole lot of 3-4 units. They're mostly built decades and decades ago. They're not really building new ones. But I think in general, right, if you're coming in as with kind of weak financing, right, like a 3.5% down loan, FHA has its own requirements that are typically beyond that of a conventional loan as well. Just in terms of the property's conditions and things like that, you're probably going to have to be prepared to look off the beaten path a little bit. And that was definitely true in my case.
I really love the fact, though, that you were super persistent. I mean, you spent all this time looking, you expanded your search to find something that worked. What was during this whole time you're looking, what was your living situation like? Were you living with friends, renting a place by yourself?
Where was I living at the time? When I was, before I made this purchase as a renter, I bounced around a lot, just finding the least expensive option. I think at the time when I first started this process in late 2014, I was living in a room in Orange County, and I shared that room with 3 other guys. The room, the house itself had seven or eight people. The room I stayed in, I shared with 3 other guys, and I paid less than $300 a month in rent. So believe it or not. So that was just my mentality for all those years. I graduated with some student loans. I was really into investing and building wealth. I just knew, every dollar I spent on, rent or on living situation at that time was just kind of money out the door that would be better used to invest in the market. Right. Yeah. So that was just where my mentality was at. And so, people would give me a hard time about that, especially people at work. But, it's just... I would rather invest the money than spend it on a nicer living situation. So, and then I moved. So that was in Orange County, California. I transferred offices at my firm to the Los Angeles office, which was about 50 or so miles northwest. And then what did I do? Where was I living? At that time I was just renting a room off the subway line for very cheap as well.
Gotcha. So still trying to keep housing as cheap as possible. And then you found this fourplex. So you bought it with the FHA loan. Do you remember roughly what the purchase price was?
Yeah, it was $435,000, which was probably the cheapest fourplex around, that I had seen. Yeah, because it was so far out off the beaten path, out in the boonies, basically. Yeah, so that was the purchase price. I also got a credit for $15,000 to make, repairs and things like that.
Okay. And then do you remember roughly what your mortgage payment was for the fourplex?
Yeah, about $3,000. And that's what it stayed that today, with just nominal increases for like the small increase in property taxes. So about, at the time, I think it was like $2,900. Now it's about $3,000.
Okay. And then what was the makeup of the fourplex in each unit? Were they all identical, like 2 bedrooms, 1 bathroom, or what was the room count and makeup for the different units?
No, they're all very small units, but it was kind of a weird type of property too. There was like a duplex and then 2 standalone properties, all very small units. I would call them all studios, actually.
Okay.
Well, maybe the larger one is a 1-bedroom.
Okay. So essentially a 1-bedroom and 3 studios.
Basically, yeah.
Okay. And then did you move into the 1-bedroom or did you pick one of the studios?
So I moved into the vacant one, which was the studio. It basically just had like a living area connected to the kitchen. Well, there was a detached bedroom there was a separate room that was the bedroom out in the back, actually. So yeah, that was the one that I stayed in. And then I rented out the bedroom in that unit too. And I just slept in the living room.
Awesome. All right. So let's dig in this a little bit more. So you bought it. 1 unit was vacant. There was 3 existing tenants in there. Did they have leases already in place, or did you put leases in place for them? And what were you getting for rents on those 3 units?
Yeah, they had units they had leases in place. They were all very much below market. There's one lady who had been there for 20 years or so, and the landlord never raised the rent. I think she was paying $650.
Oh, wow.
Yeah, and the other two were paying about $1,000 each.
So you're bringing in about $2,600, $2,700.
Yeah, and then they rented out the bedroom for $600 in my unit.
All right, so let me get this straight. You bought the place. The 3 units were almost covering your whole mortgage, maybe $200-$300 shy of that. And then you rented the bedroom out for $600. So now you got your whole mortgage covered. Your tenants are paying down your principal payment for you. You're hopefully going to get appreciation over the long term, and you're pocketing a couple $100. I mean, and this sounds like a better living situation than shortly before when you're sharing a room with multiple other people. Now you at least have the living room and the other person has the bedroom.
Right. Yep. And yeah, there was kind of if you just compared the rent to the mortgage, there was a bit of cash flow, but it was an older property, and repairs and things like that would come up from time to time. So I did the tax returns, but I didn't actually look at the actual necessarily cash flow too closely. But I would have to say it probably that first year probably just broke even. Yep. Just because the rents were so low on a cash flow basis. It wasn't until I started raising the rents that now it cash flows a healthy amount, a few $100 a month.
Awesome. And now, are you still living in that property, or have you moved on?
No. So my wife came with a house, so a normal house. So after we got married, we were like, okay, well, where should we live? So I just moved into her house, because it's a normal house, and she didn't want to live in this this thing with all these tenants, right? So we just live in a normal house now. While just keeping the 4 unit as a rental property.
Awesome. And what are you getting for rents now on all those units in the quad?
Let's see. So 12, about $4,200 a month. Yeah.
I mean, that's pretty good. If you're at $4,200 and your mortgage now is up to about $300, you've got enough money to put aside for maintenance, larger CapEx, and have a little bit of cash flow left over.
Yeah, exactly. Right. So, so, it's not, when I was first thinking about getting into real estate, I was like, okay, I was thinking about buying like turnkey stuff in the Midwest, right? Or just, cash flow, right? It doesn't cash flow like, a fourplex might in Omaha or something like that. But I think for California, Southern California, it's doing all right.
Yeah.
And, I think it will see, appreciation in the long term, probably higher than national average, but we'll see. So yeah, I think overall it's been it was a good call. I got into this property for $15,000. That was the down payment. It did take some repairs up front. That's how we were kind of able to negotiate with the seller a credit. But at the end of the day, it's a $15,000 out of pocket to acquire it. Yeah, it's been at least breaking even or cash flow positive every year since then. And so, if I just hold on to it for the next 30 years, it'll probably be $1 million asset at that point, paid off free and clear, cash flowing, thousands of dollars a month, all for an initial investment of $15,000. That's pretty good.
Yeah, pretty awesome. All right. So I know when you said you bought it, you had the 3 tenants that were already in there. As those tenants cycled out, did you use leases for tenants? How'd you actually find the tenants? And, how'd you actually collect rent from tenants? Was it just, bring over a check to my unit, or did you use any sort of software or digital payment?
So when I lived in that property for a year, they would just drop their checks off to my unit. Now that I don't live there anymore, I use Cozy.
Oh, yeah.
Well, two of the units, the newer ones, use Cozy. So 2 of the original tenants are there. They eventually moved to just depositing checks at a bank account for the property. That's what we established before I knew about Cozy and all that. But the 2 new ones, the one that replaced me and the other guy in the unit that I lived in, and the one in one of the studios that where the tenant left, now they both use Cozy.
Yeah, that makes it a lot simpler. I use Cozy too on all the properties that I still self-manage.
Right.
All right, so you're using Cozy to collect rent, screen tenants. What are you doing actually for leases? I know some folks, when they're house hacking, they just do everything on a handshake. I mean, what was your approach that you did? Like when the guy moved into the bedroom with you, did you do a lease? And then what'd you do for the other tenants as the new one cycled in?
I just used a lease I pulled from there's I think it's the California Apartment Owners Association. It's like a standard lease that's used. So I just pulled that off their website. I added an addendum for a couple things that are unique to the property. And yeah, so they're all on a standard lease.
Well, I mean, it sounds like it was a pretty good investment for you overall. You're able to get in, have cheap housing for the year. Now it's a nice cash flow property, and way down the road, hopefully be all paid off, appreciated quite a bit, and will be a good long-term investment for you. I mean, if you're sort of thinking back through this house hacking experience, what do you feel like your biggest win was with the whole project?
I honestly, the biggest win was just getting started. I mean, this is not on the radar of many of my peers.
Yeah.
You know what I mean? So I think just the luck of stumbling upon that blog post, just that kind of laid out the steps here for me, I think was the biggest win. Because once that kind of put that vision in front of you, you can't help but just pursue it.
Yeah.
But I think I was fortunate to, just have this idea in the first place through just stumbling upon that blog post.
Awesome. I mean, thinking back through that same period of time as well, what do you think your biggest challenge was? Or if there's something you could go back and do differently, is there something that you'd go back and change?
I think I would have tried to pursue buying the property a little harder early on, even though a lot of lenders said no. Sometimes I go back and ask, hey, what if, I bought, a 4-unit in Orange County or LA County in 2012 rather than 2015. And, some of the properties that I was looking at back in 2011, 2012, they've appreciated by, $500,000.
Yeah.
So, it's because that was the market was very low at that point, and for a reason. Which was kind of related to the difficulty me getting a loan. But, sometimes I wish I would have gone a little harder into it. I didn't. It is what it is. And I was still able to buy one a few years later. So
awesome. And then would you ever do a house hack again? I know you said you're now married and living in a single family home. I mean, do you think that option's out there if the right scenario came along?
I would love to, but with the wife and a little baby now, it's just, I don't think that they would be on board, to be honest. We had a room. We used to have a roommate here in a spare bedroom, for a couple of years. My wife just wanted more privacy. Yeah. So I don't really envision us doing that again in the near future. So in our house now, well, I've thought about maybe kind of doing some work on the house and adding a separate entrance, which I think, family-wise would be easier to manage, right? Yeah. Kind of keeping our family separate and then tenant separate. But, that would take some work and, I don't know, HOA approval and, city and, so that's something that I've considered looking into at some point, but I just, right now, I don't think it would fly with the family situation, but maybe in the future.
Yeah, definitely understand that. So it took a lot of convincing. My third house hack was actually the first house hack my wife and I did together, and it took a lot of convincing. We just happened to be moving to New Orleans at that time, and in New Orleans, there's tons of doubles and triples where they'll have these big, giant old mansions or Creole cottages that are set up as a double. So it's a lot more common where, like when I lived in North Carolina, a lot of the doubles and quads were in rougher parts of town. So I definitely know I couldn't have sold my wife on it then, but in New Orleans, it was easy to do. So I think some of it depends on where you're at, but I definitely understand convincing the wife was definitely a challenge.
Yeah, we think, because this comes up from time to time because we have, some extra bedrooms in our house. So maybe not going out and buying another multi-unit, but just renting out rooms in the house. And at first she was, after that roommate experience, she was very opposed to it. But it seems like every year she's gotten a little more and more open to it. I mean, that kind of stopped with the baby and things, but maybe when he's a little older, who knows? She might be open to it again. Maybe you could share some secrets on how the convincing, how that went to convince a spouse who just values other things.
Well, maybe I'll get my wife to write a blog post on how I convinced her to do it and her perspective.
That would be great.
The non-interested spouse of how I got convinced to invest in real estate and house hack. Yeah, I'll have to ask her to do that one.
Yeah, it's interesting getting the spouses on board, but yeah.
Cool. Well, Logan, I really appreciate you being on to sort of share your house hacking experience. I really appreciate it. And I like the fact the way that you were almost already house hacking with, having multiple people living in a single room, just trying to find the cheap housing before you actually went on and did what a lot of folks consider is the more traditional house hack, buying that small multifamily. But before we let you go, we like to ask all of our guests a final set of 6 questions.
The famous 6.
Are you ready for them?
Yes, I'm ready.
Awesome. All right. Number 1, what is your favorite personal finance blog, book, or podcast?
NerdWallet is my favorite personal finance blog. As a full-time personal finance blogger myself, I really look up to them and what they've done, both from a editorial integrity perspective and also obviously from a monetization perspective. It's pretty impressive.
Awesome. And we'll link to Logan's blog, Money Done Right, in the show notes so folks can go find it as well. All right, so number 2, what's your favorite real estate-related blog, book, or podcast?
I mean, you can't beat the whole Bigger Pockets enterprise. I attribute a lot of my initial interest in real estate just reading Bigger Pockets, blog posts, forum posts, and listening to their podcast. I'm not so involved in that community at this time in my life, but if when it comes to real estate online, they're kind of the go-to, at least for me. So.
Yeah, they're the biggest player out there. I definitely learned a lot over my years following Bigger Pockets. All right, so number 3, what's been your favorite travel destination so far?
That's a tough one. Whenever someone asks this question, it's always the most recent one. So my wife and I baby mooned in Italy.
Oh, awesome.
Last Christmas and New Year's. So I'd have to say Italy, and to narrow it down, probably Florence, Italy.
Yeah. So Italy's my favorite country. I've been 4 times, and I'm going back for a 5th time in the summer of 2020. So I agree with you that one. It's a pretty awesome place.
Yeah, that's awesome.
All right. So now I know you got the young baby, but what's next on your travel vacation list? Is it a Disney World trip, or you have something else sort of planned out there?
We are going to Orlando next year. You called it, for Disney World. I don't know if that is my personal, favorite next destination, but that is the only thing we have set. My wife and I have talked about maybe like spending a month or 2 in Austria. Maybe when the little guy is a little bit older. That could be as early as next year. So kind of like personally, that's kind of our next, I think, go-to on our list.
Oh, cool. So what's drawing you to Austria?
My wife just really likes Austria. She's never been, but I think something to do with the Sound of Music growing up. She just thought it was very pretty there, and she follows Austria-related hashtags on Instagram.
Oh, yeah.
And she's kind of gotten me the Austria, or at least Germany-Austria bug too. So I think, for a more vacation for mom and dad, I think that's our next goal. But the next one we have set in stone is Orlando. Next November. Awesome.
I would definitely recommend Vienna. 2 years ago, we did Munich and Prague and then Vienna and a couple other places. But yeah, Vienna was awesome. I could have spent a month there, hands down.
Really? Wow. I'd probably want to talk with you offline about that because, we just think that, while we, at the time of our life when, we just have the 1 kid as opposed to 4 or something, we want to kind of get a bunch of travel in and maybe have an extended trip somewhere. If we're going to deal with a plane with a little guy, for that long, might as well, take advantage of it. So, we're just trying to figure out where the best place in the world to do that is. We kind of land on Austria. So I'd love to hear about what she would do in Vienna for a month because that's kind of what we're thinking.
Yeah, a lot to do. And sort of I feel like you go do it before they start school, because once they start school, it's we can only go do it over the summer where I feel like sometimes it's easier to do it for folks before the kids get old enough where they have to be in school and have to have that routine.
Exactly. Yeah. We feel like we're on a timeline now to kind of get all the travel in before kind of that stage in our life hits.
Yeah. All right. So question number 5, what's your biggest bucket list item that you haven't accomplished yet?
To sell a business. For a big exit. So that is definitely on my bucket list. Whether that will be my current business, my personal finance blog, or some other endeavor I pursue in the future, one day I would like to say, hey, I started this company from scratch. I grew it, I scaled it, and I sold it.
Yeah, that's a pretty awesome bucket list item. All right, number 6, what is your favorite life hack?
Don't put your cell phone by your bed. I had a pretty bad habit of before going to sleep and also upon waking up, my cell phone's charging right beside me, of getting on there, looking at stuff. And before you know it, I'd waste 15, 20 minutes. So something that's just helped me save more time during the week is to just charge the cell phone in the bathroom in the other room so it doesn't suck that time from me.
Yeah, that's a really good one. I actually, I started working with this guy, Anthony Diaclemente. He runs this Instagram site called like Biohackers Secrets. I can't remember what it is. I'll put it in the show notes. But one of the things he talks about in his book is like trying to clean up your sleep space. So he says sort of the same thing of like moving electronic devices out of the bedroom, looking at blue light blocking technology, the sunglasses that you can wear at night if you are going to be wearing stuff. And he even recommends this little RFD device that measures RFD that you can put in your room, and moving your internet router far away from the bedroom just to clean up your sleep space. And that paired with a couple other things that has really made a difference in the quality of my sleep. So I'm 100% with you on that, like moving stuff out of the bedroom, especially our electronic devices.
Right. Yeah, they can be such a distraction. And I'm sure even when we use them, they definitely detract from our sleep.
Yeah. Awesome. Well, Logan, thank you again for being on and sharing your sort of house hacking journey. I really appreciate it so much.
Of course, Andrew. It was great being here. Thanks for having me.
Thank you for listening to the House Hacking Podcast. For more up-to-date information on house hacking, to access links and resources mentioned in today's show, and connect with a guest and host, head over to www.fibrei.com. That's www.fibrei.com, where your house hacking journey begins.